Let me tell you about a client who's come in to see us recently. Now, it's a husband and wife team, and they're in Taunton. They've been building their business pretty successfully, and they've got to the point where they're at about £60,000, £70,000 turnover. They asked a couple of questions. When do I have to register for VAT? And what can I do to make it easier for me once I'm registered for VAT? So they called with that, and I said, come on in, and let's talk it through. I talked to them about the VAT threshold. Now, the VAT threshold is when you have to register. Any business that's turning over more than £85,000 in a year, in a 12-month period, is going to have to register for VAT. Once they do, the client asked, what am I going to have to do differently? Okay, so what they're going to need to do is, on top of any money they want for themselves from sales, they have to charge an extra 20%. They keep that 20% and they pay it to HMRC once every 3 months. Before they make the payment, they're able to deduct any VAT that they've paid to their suppliers. So the amount you pay to HMRC is the difference between the VAT on your sales and the VAT on your purchases. So they knew what they had to do. They're going to have to charge a bit extra on their invoices. And then they were asking, what can I do to make my life more simple? They'd heard from a friend about the flat rate scheme. So we talked about that too. The flat rate scheme is designed to make bookkeeping more straightforward and getting your VAT return right easier. Because instead of having to calculate the VAT on your sales and then the VAT on your purchases and work out the difference between the two and make sure you've got all of the rules right for the VAT on purchases, because there's quite a few things you can't reclaim VAT on even though you've been charged it. On the flat rate scheme, it's more straightforward because all you have to do is calculate your sales, add the VAT, and then times that amount of money by a fixed flat rate. So for example, in some industries it might be 8%. This means that you calculate it and you calculate 8%, and this is the amount that you pay to HMRC. You don't have to think about the VAT on your purchases. You don't have to risk making mistakes there. It makes it much easier for a small business to do their own bookkeeping and keep everything nice and tidy. There are a few thresholds to be aware of. You can only join the flat rate if your turnover is less than £150,000 in a year. And also, if your purchases are less than 2% of your sales, then the flat rate that you're given is so high that there's no point using the scheme. So you do need to have some expenses, and you do need to have a turnover under 150. And if you have those things, you can join the scheme and your bookkeeping becomes much more straightforward. There might even be a cash flow advantage, because if your fixed flat rate is lower than the amount you would be paying on the normal scheme, you get to keep that extra cash for your business. Obviously, if the fixed rate is higher, I was telling them, well, you wouldn't join the flat rate in the first place. So what we did is we looked up their business on the list. It's on HMRC's website. It lists all the different industries and the fixed flat rate for that industry. Once we found it, we realised, yes, there probably would be a cash flow advantage to joining, and so they're ready. They don't need to register for VAT just yet though, because they haven't reached the turnover threshold. They can choose to register now, even though their turnover is about 70,000, but they won't have to register until they hit 85. When they do that, we're going to register them. In the month that you hit £85,000 of sales, you don't actually have to do anything. It's the next month that you register, and you become registered for VAT from the month after that. So these guys are coming in and planning ahead, which is a really good idea. If you think that this is something that you need to be aware of, then get ahead of it. Work out the impact it will be. These guys normally put their prices up at about this time of year, and so planning ahead means that they can build into their prices for the new year this 20% tax that they need to charge their customers. It means that they can have confidence about the amount of money that they will have next year, long before we get there. If all of this sounds too complicated for you, of course you can come to us and we could do your bookkeeping. This is another way of making bookkeeping much more straightforward, and this works even when your turnover is higher than the flat rate scheme will allow you to be earned. So that's the flat rate scheme, and how planning ahead can make it easier to manage the impact of registering for a tax that you really would rather not have to.